Good morning, everyone. This is Tara Sewell, internal wholesaler with Financial Markets. First of all, from all of us here at Financial Markets and the carriers you sell each day, thank you. Together, we protect families and their financial futures. Congratulations to Rhonda. She was our winner of the March Madness drawing, where she had her choice to receive a locking gun safe or a big screen TV. She chose the gun safe. And congratulations to the runners-up, who each won a $50 Amazon gift card. Now let's dive into the details of today's giveaway. You earned one ticket for every application submitted, one ticket for $10,000 in anticipated annuity premium, and one ticket for $1,000 in anticipated life, MedSup, DI, or long-term care premium. Double tickets were received for every application with our premier carriers, and triple tickets for every case submitted on or after April 16th and placed by July 9th. Today, one producer will win their choice of a Blackstone 28-inch griddle with an air fryer or a locking gun safe. 4 runners-up will receive an Amazon gift card. And remember, you must be registered with your full name and present on the call during the webinar in order to win. Today, the odds are in your favor. 5,323 total tickets are in the hat, and the hat has been shuffling all morning long. Now, your name can only be drawn once, and again, you have to be present for the duration of the call. Now, let's get started and draw our first finalist. We're going to shuffle these names just one more time and drop our names in the hat. Let's draw our first finalist, Robert Rapp, with 24 tickets in the hat.
And we do have Robert Rapp.
All right, Robert Rapp, congratulations. You are our first finalist. Now, you may have noticed a new and another quote option available on fmiAgent.com. This is WinFlex Web. This is a tool that our internal wholesalers have used to design and generate NAIC-compliant illustrations for many years. While you've had the ability to use WinFlex Web in the past, you had to individually request the carriers to be enabled on your profile. Now, by accessing WinFlex Web through fmiAgent.com, you can have access to all of the top carriers without requiring prior contracting and approval from each specific carrier. And here's the best part, without having to remember another username and password. Check this out the next time you are on fmiAgent.com. On to our next finalist. So far, we have Robert Rapp. And our second finalist, Lisa Ware, with 321 tickets in the hat. Is Lisa on the call?
And Lisa Ware is on the call. Wow, 321 tickets too. Great.
Wow. Congratulations, Lisa. If you haven't yet, you can subscribe to the Financial Markets YouTube channel at youtube.com/fmiAgent. You will find webinar replays, sales concepts, case studies, consumer videos, and the new Brighter Summer Day series by Ed Bartling. Visit the page, check out some videos, and don't forget to hit subscribe so you can receive notification as new content is posted. On to our third producer draw. So far, we have Robert Rapp and Lisa Ware, and our third finalist, Andrew Massian. Is Andrew on the call?
And Andrew is on the call, so 3 in a row.
All right. Congratulations, Andrew. As a producer working with Financial Markets, you have access to many great retirement protection plans and options. Today, Neil Sperling, Vice President of Financial Markets, will be discussing an amazing option now available in retirement planning. You will not be disappointed with what you're about to hear. Neil?
U.S. debt is certainly staggering. This screenshot from the usdebtclock.org was taken this Monday. It shows the U.S. has $28.5 trillion in national debt with over $400 billion in annual interest on that debt. It also shows a whopping $150 trillion in total U.S. unfunded liabilities. Further, and interestingly, according to The Sun, a UK news outlet, the total value of all money in all currencies worldwide was $36.8 trillion as of December of 2020. So the U.S. currently has debt nearing the value of all the money in the world. While this information is shocking, the question is, what does it mean for U.S. taxpayers? TaxPolicyCenter.org publishes a great deal of information on U.S. taxation, including the marginal income tax rate history. This chart, last updated in 2020, shows the highest federal marginal income tax rate for individuals going back to 1913. While we are not currently at the lowest rate we have been in the past 50 years, we're near the lowest rate in 2020, which is supposed to continue at least through 2021. With all the federal spending over the past 2 decades, along with huge federal spending over the past 18 months, how will the U.S. government pay for those expenditures? They've been great at printing money, but at some point most expect federal income tax rates to increase. After considering the current and potentially higher future tax rates, everyone that owns an IRA or similar tax status account has a close partner in retirement, good old Uncle Sam. In 2021, the federal tax rate is anywhere from 10 to 37%, depending on the amount of taxable income and the filing status of the taxpayer. While over the years these people enjoyed deducting their contributions, now at harvest time, paying taxes on the fruits of their investing doesn't feel that great. More recently, since '97, was the start of the popular Roth IRA. While no deduction on the front end for the contributions, the distributions are generally income tax-free, as you know. But there's an often overlooked tool called life insurance that can create a very similar tax situation like a Roth IRA. You see here it indicates a properly designed life insurance plan. This refers to modified endowment contract testing. We call this the MEC limit. If the plan is designed placing too much premium in the life insurance policy, it can violate the MEC limit, and then the distributions may be taxable. When we design a life insurance plan with the intent for retirement distributions, we design the plan so that it does not exceed the MEC limit. I would contend that tax planning is the single most important component to retirement planning today. As we looked at previously, we're in a very favorable historical tax environment. We have historic all-time low interest rates. There's continued volatility in the equity markets and also some uncertainty in the equity markets. Interestingly, and adding to the perfect storm, is that in December of 2020, in the U.S. federal spending bill, Congress changed 26 U.S. Code Section 7702, guess what, to the benefit of consumers. Section 7702 dictates the premium limits for life insurance policies before they are considered a MEC. This is the first change to the calculation since the 1980s. The December 2020 change to 7702 effectively allows a client to place more premium into a policy, given the same death benefit, that we were able to prior to the change. With this, the lower the death benefit compared to the premium or policy values, the less expense there is within the policy. This allows and provides for more potential growth. All of these factors contribute to the perfect storm. While I mentioned life insurance, here and today, we're specifically talking about fixed index life insurance. As you know, with this type of coverage, the client can never lose value due to a market loss. Of course, there are charges in the policy for the death benefit protection, but in our designs, and thank you to the changes to 7702, we can keep the cost as low as possible to help foster cash value growth very efficiently. That growth, coupled with tax-deferred and generally income tax-free distributions, make a fixed index life product very ripe to be a key part or even a substantial part of your client's retirement plan. So let's take a look at a typical design for a fixed index universal life focused on distribution in retirement. In this case, we are paying $25,000 annual premium for 5 years on a healthy 45-year-old. Total premium paid over the 5 years is, of course, $125,000. Then, beginning at age 65, we determine the maximum level annual distribution that can be taken while maintaining coverage beyond age 100. Of the top 6 products, in this case, North American has the best projected performance, showing $24,000 and change in annual distributions. If this client lives to age 65 and the policy performs as illustrated, the client would have received over $600,000 in distributions by age 90. And all of those distributions would be income tax-free with our understanding of current tax law. While North American is very competitive and often a top contender, the other carriers on this list could easily be in first place depending on the client age, gender, funding pattern, and risk class. So on this case, since North American took the gold, let's look at their plan a little closer. Here's the illustration the prior comparison was based upon. As you can see, and I know the type is kind of small, but the client is placing $25,000 premium in the plan annually. The initial death benefit is $328,000, and this is the minimum death benefit allowed at this age, gender, and risk class to avoid the MEC guidelines that we discussed earlier. Let's scroll down. At age 65, you can see the client begins the annual loans in the amount of $24,000 and change. Now, the interesting thing about this type of design is that when we take the loan, there's a loan interest charged. However, the loan money is still being credited returns based upon the index allocation selected. Permitting the index returns a rate higher than the loan rate, the policy still supports itself even with the loans coming out annually. I can tell you this policy will never perform like this. It will be better or worse than illustrated depending on actual index credit history and loan interest rates. However, even if at that time the result determines distributions can only be sustained at, let's say, $17,000 annually, that would still result in the client receiving tax-free cumulative distributions of $425,000 through age 90, while the client only paid $125,000 into the plan. Or the results could, too, be more favorable. Either way, not too bad in my opinion. Those of you that are wondering, what is all the fuss about? I've heard this before, and likely many of you have offered and sold this to many of your clients. Let's look at this from a different angle. What if we could do even better than what we just reviewed? What if we could do a lot better? How would we achieve that? Simply, we need to increase growth. One way to increase net growth is to lower the costs. Well, as we mentioned a bit ago, Congress just did that for us through the December 2020 MEC changes to the IRS Code 7702. Another way would be to increase risk for better potential returns. But as mentioned previously, while there may be a specific product exception to this, generally there is a floor in a fixed index product where the client has no market risk. So that's not a practical way in this type of plan to increase growth. But another way would be to increase contributions. But you might say your client is rebutting and saying, that's the most I can or I'm willing to place in this plan, the $25,000 annual in this example. Well, maybe there's another way. Hey, let's consider something here. What kind of home do your clients live in? Is it 750 square feet and they're proud that they paid cash for it? This nice one-bedroom, one-bath house with an attic for storage and a small kitchenette is quite affordable. But I'm guessing that your clients don't live in a house like this. I'm guessing that many of your clients live in a 2, 3, 4, or even 5-bedroom house, and it's probably anywhere from 1,200 to 4,000 square foot with nice amenities and likely a 2 or 3 car garage. Well, how did they get into so much of a home? They use leverage. Simply put, they made a down payment and the bank provided funds through a mortgage to cover the rest. So they use leverage. Could your clients get a bigger retirement through leverage? That's what the big deal is all about here today, leverage. Now that we set the stage for how life insurance can provide significant distributions in retirement, let's look at how using leverage with life insurance can provide even more significant distribution potential in retirement. I introduce you to Kai-Zen. This is a plan created by a third-party administrator called NIW. While using leverage with life insurance has been used as early as the 1960s, leverage, or premium financing with life insurance, was reserved only to the ultra-wealthy. Kai-Zen is available for persons with household incomes as low as $100,000. Kai-Zen was first introduced in 2012 and has become very mature in all aspects. People often ask why they named it Kai-Zen. Kai-Zen is a Japanese term meaning change for the better or continuous improvement. NIW actually created Kai-Zen for themselves, their employees and families, by trying to improve on the programs that they had made available to their ultra-wealthy clients for the prior 20 years with traditional premium finance. NIW has actually facilitated over $5 billion in loans since their founding. We here at Financial Markets took a very conservative approach to Kai-Zen. We first started evaluating Kai-Zen in the fall of 2019. About a year after evaluating, testing, and researching, we tested this in some key agent and advisor firms. In the past 7 to 8 months, those key relationships have generated a little less than $1 million in target commissionable premium and have satisfied many clients. We appreciate how important your recommendations are to your clients, and we don't take that lightly. We have thoroughly vetted this third-party administrator and are very comfortable with the soundness of the plan. Further, we have searched the marketplace and found no other plan that does all of what Kai-Zen does. This is truly the best of the best when life insurance is part of the retirement planning process. We are only one of just a few preferred partners offering Kai-Zen. Agents and advisors accessing the Kai-Zen plan through a preferred partner get additional tools to help you with prospecting, lead generation, and also enrollment services. So remember the prior slide with a typical design for a fixed index UL focused on distribution and retirement? In this case, we're paying the same $25,000 annual premium for 5 years on a healthy 45-year-old. North American had the best potential distribution at age 65 with $24,000 and change annually. By using the leverage offered through Kai-Zen, we can potentially improve on that by more than half, and in this case, reaching over $37,000 in potential distributions, annual distributions, beginning at age 65. I hope this gets your attention. This is potentially 52% more income by using leverage, and the client is paying the exact same premium. So let's look a little deeper at how Kai-Zen works. By using leverage with Kai-Zen, the Kai-Zen plan can add up to 3 times more money to what they're able to do on their own. So that client that said they can only put in $25,000 a year, we can put up to 3 times more using Kai-Zen. It'll provide the potential to increase their retirement income by anywhere from 40 to 80%, and the previous example was 52%. And of course, it'll provide the potential for more death benefit protection during their earning years. With other leverage plans, known as traditional premium financing, the client needs to complete a loan application, provide documents proving creditworthiness, sign loan documents, provide personal guarantees, and make interest payments. The bank needs to set this up because the client is securing the loan personally. If the plan does not work out as expected, the client is on the hook to repay the loan. Kai-Zen uses a different type of investment as the security for the loan, and that is only the life insurance policy itself. Of course, Index Universal Life has potential tracking the market without actually being invested in the market. It also has a floor which protects the product from losses due to market declines, which minimizes the risk to the bank when using leverage. This is what makes Kai-Zen different than any other premium finance program in the marketplace. The policy itself, and only the policy, is the collateral for the loan, meaning in the absolute worst case scenario, the only risk to the client is the premium personally paid. The lender can never reach further than the policy itself to be paid back for the leverage premium. Again, so important, the only collateral in the premium finance loan is the insurance policy itself. There's not another program in the marketplace that we have been able to find where the only collateral is the policy. There are certainly other premium finance programs in the marketplace with similar features to Kai-Zen. However, none of them limit the collateral to the policy itself, and the client has to provide a personal guarantee for the loan premiums. I'm going to push this again. The most compelling feature of Kai-Zen is the client is not required to be personally liable for the loan. So there are no personal guarantees, no interest payments, no loan documents. The loan approval is based only on the financial underwriting by the insurance company, and no credit checks. So we're going to take a high-level look at how Kai-Zen works. The goal is, of course, to increase growth. To increase growth, we need more money available that can grow. To do this, the client makes 5 annual premium payments, represented here in blue, that are matched by the lender as shown in green. Then only the lender funds the policy years 6 through 10. The lender is effectively providing 3 times more funding to the index life policy than the client is. The more value in the policy, the more dollars are credited by the index returns. The product used in this design is issued by National Life Group, Life of the Southwest. Their product also includes an attractive chronic and terminal illness rider that can allow the client to accelerate the death benefit in the event of a chronic or terminal illness. And the National Life Group policy is designed with the lowest death benefit allowed relative to the premium to avoid MEC guidelines. The lower the expenses in the life insurance policy, the better potential growth of accumulation. Of course, with an Index Universal Life product, it has crediting potential linked to an outside index such as the S&P 500, along with a 0% floor in the event of a market decline. Then, the best part is the potential tax-free distribution in retirement. Again, income tax-free is key. And since this is, after all, a life insurance policy, should death occur premature, the death benefit minus the outstanding loans will be paid to the client's named beneficiary. Again, and also income tax-free. While the client can stop the plan at any time and receive back the policy cash value minus the bank or policy loans, in the design of Kai-Zen, the plan intends for the bank loan to be paid back in year 15. It's paid off using withdrawals to basis and loans from the insurance policy. Once the bank loan is paid off, the client has full and direct access to the remaining values and benefits in the policy. At the time of retirement, they can then, of course, take their tax-free distributions through loans, while knowing that the policy benefits, of course, are available when needed. One of the biggest parts of the Kai-Zen plan is the annual servicing, monitoring, and stress testing. The annual servicing is paramount here. There are other premium finance programs, maybe even similar to Kai-Zen, but they don't provide the annual servicing and monitoring. That in and of itself is key for your client's success. If you don't have someone watching it, where could the plan go? And of course, stress testing. This is a really big part of it, and we'll take a look a little more about that next. Above is an example of purchasing an index policy using 5 annual payments from the participant. The blue bar here is purchasing the index in today's market conditions and adding financing. The gray bar is purchasing the index in today's market conditions with no financing. In the blue and the gray bars, the assumptions for growth and costs are identical. The financing is paid off in the 15th year using policy loans. You can see the potential advantage of using financing. The orange bar shows what would have happened if we used financing through the highest borrowing rate time period in history. In this test, interest rates were as high as 16.88%, while using today's growth rate until the 6th year, where we increased the growth rate to a maximum of 15%, even though the credit rates of the time period would have been higher. This is a very conservative stress test, but the purpose was not to see how much income we could have potentially generated, but it was to make sure that as the borrowed rates increased, we need to know if it would create the bank to call the loan or require the client to add additional money to secure the loan. As you can see, it outperformed the no financing self-funded policy of today's market. The yellow bar shows what would have happened in the Great Depression. The stress testing proves the Kai-Zen plan is a pure benefit to your client. One thing to know is mechanically how the client is insulated from the loan risk. When the plan is established, NIW creates a trust with the partnership of Provident Trust Company. That individual trust is issued specifically for your client's policy. That trust owns the life insurance policy. That trust is the entity that lends the premium from the bank. That trust is what pays the premium to the life insurance company, and that trust is what pays back the loan in year 15. After year 15, the client can continue the trust with Provident Trust or take over the trust and have their own administration elsewhere, or transfer the policy ownership to themselves personally. Now, the trust that I'm talking about is a trust created in the state of Nevada, regardless of where your client resides in the U.S. Since the owner of the policy in this case is the trust, and this trust is a Nevada entity, you, the producer, must be licensed in the state of Nevada. For agents who are residents in Nevada, you already have this covered. If you live outside of Nevada and you do not have a non-resident life insurance producer license in Nevada, you can obtain your non-resident license on our website with just a few clicks. Nevada charges $185 plus processing fees for that license. Just something to keep in mind. Since Financial Markets is a preferred partner with NIW, you have access to all the tools offered for producers. Preferred producers have access to an invite and enrollment platform you can use to invite clients to learn about Kai-Zen and explore their potential benefits online. The system also includes where your client can start the application process in that same portal. And just last week, with NIW, we released an option for you to have a personalized website link. You can send this to prospects or even share the link on your website or social media. The site link ties the client to your account, and they can self-initiate the process to learn about Kai-Zen and even begin the application process. Each week on Saturday, you receive an email from Financial Markets about our weekly training sessions that will be hosted the following week. In that email, you'll find a link to register for our Friday weekly Kai-Zen producer training webinar and Q&A. Be sure to check that out. In order to solicit the Kai-Zen plan, you will need to complete and sign the NIW non-disclosure and selling agreement with the preferred producer addendum. You can find that on our website on the Kai-Zen product page or request your internal wholesaler to email it to you. Next, if you do not already have a Nevada resident or non-resident license, you'll need to obtain that. And finally, you'll need to be contracted with National Life Group, the company that issues the index life plan on which Kai-Zen is based. All pretty easy to get started in offering this just amazing plan. There's so much more that we could share about Kai-Zen, but in the interest of time, this was just a high-level overview. Check out the Kai-Zen product page at fmiAgent.com, or please contact your internal wholesaler at Financial Markets to learn more and get started offering Kai-Zen to your clients and prospects.
Thank you, Neil. I am so excited about the opportunities that Kai-Zen has to offer. Please be sure to contact your internal wholesaler at Financial Markets to get started. Now we're ready for our fourth finalist for the Blackstone Griddle with Air Fryer or the Gun Safe. Now, just to recap, we have 3 finalists so far: Robert Rapp, Lisa Ware, and Andrew Massian. Here we are for our fourth finalist. Kirby Bowden with 186 tickets in the hat, and I did receive a message that she is on the call. I just got a text. Congratulations, Kirby. Oh, there we go. Now, Kirby Bowden was our fourth finalist with 186 tickets in the hat. Let's draw our fifth producer finalist. Carol Heller with 15 tickets in the hat. Is Carol on the call?
Take a look. And Carol is not on the call, Tara.
All right, let's draw another producer here. Darren Banner with 296 tickets. Is Darren on the call this morning?
And Darren Banner is on the call. Congratulations.
Congratulations, Darren. Now our 5 finalists are Robert Rapp, Lisa Ware, Andrew Massian, Kirby Bowden, and Darren Banner. Now, we do have our 2022 fmiAgent Alaska cruise. This is a redo. In 2020, we were not able to go on a cruise due to the pandemic, but we are offering this as our incentive for this year. With as little as $1 million of annuity premium or $30,000 in life premium or any combination, you and your guest could be on your way to Alaska in 2022.
While Tara is going to put the 5 finalists in the hat for the final drawing, hey guys, look, for as little as $30,000 of life premium, you and a guest can join us, or as little as $1 million of annuity premium, you and a guest can join us on the Alaska cruise. It's going to be a great time. They're finally getting the cruise ships open back up, and we expect to be able to port next spring. Certainly looking forward to hosting you all there. And as far as the presentation here about the leverage using index life and the Kai-Zen plan, hey, reach out to your internal wholesaler here. We're excited to visit with you about that. There's a good amount of information also on our website, fmiAgent.com, and click on product kits, and you'll be able to find more details there, including the non-disclosure selling agreement that you can submit to us here in our contracting department. So thank you, everyone, for your business, and we'll turn it back to Tara.
All right, I have our 5 finalists in the hat. Let me just move this over here. Got them shaken up here. We'll drop them in our hat. All right, folks, let's see who is going to have their choice of a Blackstone Griddle or a Gun Safe. And our finalist, Kirby Bowden. Congratulations, Kirby. And also congratulations to our 4 runners-up on winning a $50 Amazon gift card. Our next promotion will be starting tomorrow, so watch your inbox for details. Thank you for your time today, and thank you for your partnership and your loyalty. Have a beautiful day.
Thank you, Tara. Thank you, everyone.